So Shana, I want you to chime in on the discussion here, because some of the fundamentals seem like they would line up for the way the market over the past month signaled it would go if there's improvement. COVID curves are going down here in the U.S. We're trying to reopen. We've got vaccine progress, yet it is not changing where investors put their money right now.
Yeah, today certainly feels like that work from home, non-reopening trade that we've talked about in the past. But I think that provides an opportunity for us to look at some of these reopening trades. It does appear that the vaccine progress is accelerating. It does appear that these hotspots are getting better and these curves are getting better. And as long as that continues, there's still an opportunity there. I think, as your previous guest pointed out, the lack of an extension of a support program of the CARES Act by Congress is absolutely weighing on investors in terms of how bad things will get before Congress finally comes to an agreement. And that is what I think is really holding up the market. That and Powell's comments tomorrow, Chairman Powell's comments tomorrow. The minutes from July were less dovish than they've been in the past. And so that's also a key concern. But on the flip side, we have these very strong earnings announcements coming out from the technology stocks and from some of the CRM stocks. And we continue to have earnings surprises across the board. And that is continuing that momentum we're seeing in those technology, work from home related names. Absolutely.
Shane, I like the point about the fiscal extension, because we could look at the market making highs and go, okay, the market's all right with there not being that fiscal extension, but you look at the airlines, you look at the other places, the more specific economically sensitive areas, and they're ailing. So what do we look for to see if indeed that is tied? I think it's a very good logical case that it is tied to the lack of fiscal stimulus. But what about the data itself? I mean, we're still getting good numbers here. I know the consumer sentiment was a mess, but the home purchases and some of the high frequency retail sales are also really impressive. So they may not be voting in the survey as positive, but they're voting with the money as positive.
I would say overall economic data is positive, but that doesn't necessarily help some of those reopening trades, like the cruise lines, like the hotels, like the airlines. I think of the three key areas that are really sensitive to the reopening, I think airlines are likely to see the first signs of hope if and when a stimulus package does occur. And that's because they're not as reliant or solely reliant on leisure travel in respect of tourism. I think people are going to want to go visit family that they haven't seen in quite some time. But a lot of people don't know. I know myself, trying to figure out what I want to do for the holidays is really tough, because my home state has some restrictions for me to be able to go visit. And so I don't want to book anything until I have some idea if those are going to continue to be in place or if they're going to in some way be lifted. And we really won't know any of that for another month or two. So I think a lot of these things, despite this really positive information on the virus front, are holding people back from starting to rebook travel, rebook any sort of tourism, vacations, or things of that sort.
Okay, so how do you put this right now into a market view and execute on it, having that optimism generally I hear coming from you about the progress we're making, but still acknowledging that it may not be compelling enough to cause somebody to sell out of a sales force and go buy an airline? I know you use ETFs a lot. What are the top picks in terms of funds right now that you're looking at?
So we actually did just initiate a position in JETS.
Oh, all right.
We did that in our buy right portfolio. If you look at the options on JETS, they're very attractive. So it made it easier for us to go in and make that trade. But it's also a reflection of where we think there's an opportunity going forward. Now, we continue, as we've talked about in the past, to maintain a hedge with BTAL. Now, BTAL is the AGFIQ U.S. market neutral anti-beta fund that we've talked about at length in the past. And that, because of the low volatility and the low beta of these technology names, tends to be heavy in some of these non-reopening trades. And so today, for example, it is up, and I think it might even be up more than, it's right in line with the S&P 500 right now. But that is something we use as a hedge. So we're cautiously optimistic, but we still feel like there is some potential downside in these technology names. We want to take advantage of the places that are undervalued, like JETS, where we think there will be support through a stimulus, through Congress passing the stimulus bill, but not as sensitive to what we think will take longer, which is people returning to normal travel, business travel, things of that sort.
So you're trying to thread the needle basically between acknowledging that there is better growth to be had and trends that are stronger outside of places like jets, still having a holding there if there is progress. But then like BTAL, for example, we've seen that do well on days like today. We've seen it do well when the momentum and kind of growth trade is in vogue. We've also seen another one of your funds obviously do really well. One of the funds you're invested in, VCR, that's consumer. That looks a lot like one of the pure online and e-commerce style plays. To me, that looks like the one in your list here that's kind of most momentum tied right now.
I would say that one, and I believe I also had IBUY.
IBUY as well.
Which is also very momentum. The one that I find most interesting in that discretionary place is the FXD, which is the First Trust Consumer Alpha Dex ETF. That one is a little more value oriented. So if you're thinking second stage of a recovery, that is an ETF that's more likely to benefit from a reopening trade. So again, we're trying to thread the needle here where we're trying to take advantage of opportunity where we think that as things continue to progress and things get positive, I really do believe that Congress is going to eventually come to some sort of agreement on extensions of the stimulus, because one of the parties is going to want to claim victory on that in time for the election. And so I think that's going to happen, and that will help a lot of these reopening trade stocks do well. But it remains to be seen. It's hard to get out in front of the momentum. I mean, it's like getting hit by a freight train if you don't participate. And it always reminds me of my favorite quote from John Maynard Keynes, which was, the markets can stay irrational longer than you can stay solvent. And we've seen that time and time again. Being early on these things is worse than playing them through and following the momentum a little longer than it feels comfortable, for sure.